Hey, if you've got money sitting on the sidelines and you're thinking about jumping into AI stocks, there's one question that keeps coming up again and again. Do you go with Nvidia, the undisputed king of AI chips, or do you bet on Alphabet, Google's parent company, which is quietly building one of the most powerful chip ecosystems on the planet? Let's break this down because over the next 5 years, this decision could make a massive difference to your portfolio. So first, let's talk about Nvidia. I mean, where do you even start? This company has basically become the backbone of the entire AI revolution. Their H100 and the newer Blackwell GPU chips are what every major tech company, Microsoft, Amazon, Meta, you name it, is using to train their large language models. Nvidia's data center revenue absolutely exploded, crossing over $22 billion in a single quarter, and their profit margins are the kind of numbers that make accountants do a double take. We're talking gross margins hovering around 74 to 75%. That's extraordinary for a hardware company. When ChatGPT took off, Nvidia was the one handing out the shovels in the gold rush, and they got filthy rich doing it. But here's where it gets really interesting. Alphabet isn't just sitting there watching Nvidia rake in the cash. Google has been developing its own custom chips called Tensor Processing Units, or TPUs, for nearly a decade now. Their latest generation, the TPU V5, is specifically designed for AI workloads, and here's the kicker: Google uses these chips internally to power everything from Google Search to YouTube recommendations to Gemini, their AI model. By building their own silicon, Alphabet is essentially reducing their dependence on Nvidia, which saves them billions in procurement costs every single year. Now, from a pure stock valuation standpoint, Nvidia is trading at a pretty steep premium. The market has priced in a lot of future growth, which means if anything slows down new competition, a dip in AI spending, supply chain issues, the stock can get hit hard, and we've seen that volatility play out already. Alphabet, on the other hand, is still primarily valued as an advertising and cloud business, which means you're arguably getting the AI chip development almost as a bonus, at a much more reasonable price-to-earnings ratio. Here's something really worth thinking about though. The big hyperscalers Amazon, Microsoft, Meta, and yes, Google are all building their own custom chips. This is a long-term trend that could gradually chip away, pun intended, at Nvidia's dominance. If these companies become more self-sufficient in silicon, Nvidia's total addressable market could face some real pressure down the road. That's not a short-term story, but over 5 years? It absolutely matters. That said, Nvidia isn't standing still either. They're not just a chip company anymore, they're building an entire computing platform with CUDA software, networking infrastructure, and enterprise AI services. Switching away from Nvidia isn't as easy as just buying a different chip. There's a massive ecosystem lock-in happening, and that's a genuine competitive moat. Alphabet brings diversification to the table. You get the AI chip angle, sure, but you also get Google Cloud growing at over 28% year over year, YouTube, Search, and now Gemini AI products reaching consumers directly. It's a more balanced bet. So which one do you actually own for the next 5 years? Nvidia gives you pure, concentrated exposure to the AI infrastructure boom with incredible fundamentals but higher risk. Alphabet gives you a steadier, more diversified ride with underappreciated chip ambitions baked right in. And honestly, the most interesting question isn't which company is winning today, it's whether the companies buying Nvidia's chips today will eventually become its biggest competitors tomorrow.